Welcome to the Travelex Weekly Outlook for August 29th. The U.S. currency got off to a mixed start. We have seen the U.S. currency under pressure against the euro and the Aussie dollar and other riskier currencies like that. But the dollar is in pretty good shape this week, at least to start the week out, against the Swiss franc. Driving markets higher this week has been continued optimism from some upbeat remarks the week before by Fed Chairman Ben Bernanke. For one, the Fed Chairman Ben Bernanke, he basically said that although the U.S. recovery might not be pretty to look at, he did say that the economy is on pace for longer-term prosperity. So after initially falling in the wake of his announcements last Friday, we did see the euro and other risky currencies find their footing as investors focused on some of the more growth positive remarks that he had to say about the long-term prospects for the U.S. economy. But the fact that the Fed Chairman Ben Bernanke held fire on announcing a new round of quantitative easing, that initially boosted the dollar, but what really did in the dollar late last week and into the start of the last week of August has been the fact that the Fed Chairman has said that he could use more of the Fed's monetary tools to support growth in the event that it doesn't appreciably pick up toward the balance of this year. And of course, the Fed Chairman, he also kept the door open to the prospect of more monetary stimulus measures. Of course, those tend to be at the heart of the dollar's weakness, since their aim is to drive down longer-term interest rates, which really dampens the appeal of the U.S. currency. But having said that, the dollar is off to a great start to the week against the Swiss franc, as most major currencies are. The Swissy has fallen to its lowest level in 5 weeks against the greenback. This is coming as investors again have embraced riskier currencies. That has put some of the haven destinations like the dollar and in this case the Swiss franc under some pressure. Another factor that's weakening the Swiss franc has been talk that a large Swiss bank, UBS, they are considering imposing a fee on the accounts that safe haven seekers tend to maintain to ride out turbulence within the Eurozone or even in the global economy. So again, that was a measure to really deter some of the safe haven seekers to keep funds parked at that bank. So that is something that is really coming as welcome news to Swiss authorities, which in recent weeks have increasingly adopted measures to engineer a weaker currency, which really puts pressure on the Alpine economy. But last week, for the most part, really Monday through Thursday, the dollar had maintained an even keel. That's as investors really shunned or avoided placing big bets ahead of the Fed Chairman Ben Bernanke's remarks on Friday. Once we did get word of those remarks, once they hit the news wires, we did see the dollar get an initial boost. That's as the Fed Chairman had dashed some market expectations of more monetary stimulus. Again, those measures are really designed to help boost growth, but they ordinarily come at the price of a weaker currency. But we did see risky assets eventually move higher, and that was again on some of the optimistic tones that Fed Chairman Ben Bernanke had struck on the longer-term prospects for the economy. In fact, the Fed Chairman even tried to enlist support of U.S. lawmakers in Washington to perhaps pass some legislation aimed at boosting growth. So that is another thing that helped risk sentiment rebound. But for the dollar, again, the fact that the Fed Chairman kept the door open to more monetary stimulus in the months ahead, that was really at the heart of the dollar's decline late last week into the early stages of this week. But as I mentioned, in terms of the longer-term course for the U.S. economy, the Fed Chairman does expect that to pick up and to gain strength over the coming quarters, and that should hopefully give the economy enough strength to finally bring down the nation's high unemployment rates. For this week, it's going to be a busy week for U.S. data. In fact, the main focus is going to be on Friday once again. That's when we get the latest on non-farm payrolls. Those are seen coming out at around 75,000 new jobs for the month of August. That's down from the almost 120,000 that were generated in July. If we get a report that's weaker than that, that would tend to increase expectations of more monetary easing from the Fed. That would tend to weigh on the U.S. currency. But if that was realized, if we did get a lousy jobs number on Friday, that might also stoke demand for the U.S. currency as a safe haven. So that is something to watch and see how markets respond to that. In addition to the jobs data on Friday, we'll get a look at U.S. consumer confidence, as well as the ISM index for the manufacturing sector. That is forecast to slip below 50. That would signal contraction territory. So again, that could add to, or that could renew concerns about the health of the U.S. economy as well as the pace of global growth. But for the latest on the dollar, feel free to check us out online.